Well, friends, it seems like my hard work and smart investing did pay off eventually, as I just became a millionaire. Honestly, I was really thinking long and hard about making this video or not, because it's really cheesy, right, to call yourself a millionaire. But eventually, I really realized I'm all about transparency, right? I document my journey as an investor and also share with you, my monthly portfolio updates and so forth. So I thought it's only right to continue the same and also share with you my wins, right? And yes, hitting a 1 million euro investment portfolio was certainly a benchmark for me that I wanted to reach for a long time. So I'm really excited to finally have crossed that number, slightly more now, but yeah, really exciting. And obviously I also want to share with you how I got there, how it's composed of, my learnings from it, how do we define what a millionaire is, what it means, and whether it's a lot or not. So let's talk about it. Now, for some of you watching, I know for a fact a million seems like peanuts. You have been investing for many years, have successful jobs, and invested in many different things which grew over the years. So for those people, congratulations, hats off, well done. But eventually also you were at that cross point, right? The same way how we start reaching our first 100K, then 1 million, and it hopefully continues to exponentially grow from there. And of course, my goal is also to continue growing that and not just stop at 1 million. While others watching may actually think, well, that's a lot, that's a big portfolio. And I totally get it, right? Maybe you're still in high school or you're in university or starting your first job. To get to 1 million seems like a stretch, right? It's hard to even pay your rent on a monthly basis. I totally get it. I was there the same when I did my university, even here in the UAE. I didn't really have much money to spend at all, let alone invest towards growing my net worth, right? I was just trying to get by. So I totally get it. But obviously, that's the mission of my channel, to help you optimize your finances, get on top of it, and grow it over time. So I'm really happy, of course, to also lead by example and show that it is possible. And yes, this is my own money that I made. It's not inherited or what have you. It's really working for the money and investing it smartly and letting it grow over time. And also, this is my personal money. Now, obviously, I do have a super successful wife, but we keep our financial accounts separately, because sometimes I see some YouTubers say, oh, I became a millionaire, multimillionaire, but then basically they consider the entire family portfolio, which is totally fine as well. But in my case, I really want to talk about my personal assets that I managed to build up and also show you how it is possible potentially for you to do the same in the future. And despite my initial thoughts of making this video, I kept coming back to the point that I really wanted to make, and that's the danger of comparing yourself to others. And that's so easy to do and to fall into that, right? The same how we all do that. That's natural. I do it myself, of course, right? When you meet friends, you meet some others, new people, new acquaintances, business colleagues. You kind of try to gauge them up and see how much they might potentially be earning or might be worth. And, it's normal, right? There's nothing wrong with it and you don't have to stop it. But don't fall into the trap of constantly chasing and outperforming others, because that way you're surely guaranteed to be unhappy in life. Because guess what? There's always going to be somebody more beautiful looking than you, fitter than you, and arguably wealthier than you. And I mean, living here in the UAE, it's really humbling, because when you think you're kind of doing okay in life, you look around and you see so many ultra successful people around you. And that alone for me is always such a good reminder to shift the mindset away from greed and jealousy to seeing opportunities and being inspired by those successful people. And that's something I really recommend you. Because if you purely base yourself on net worth and income potential, well, based on that, there should only be one very happy person in the world, and that's Elon Musk, being the richest man in the world. Everybody else should be depressed because they have less money than him, right? And obviously, that's not the way to live life. At least that's not the way I intend to live life. While I said it's impossible not to compare yourself to others, you want to, most importantly, compare yourself to yourself 1 year ago, 5 years ago, 10 years ago, and see that progression over time. And that's what I did as well. That's why I track my net worth, and I'll show you in a second how that developed over time. But I think that's really the difference, to see your growth over time. Don't compare yourself to others. That's a losing battle. And another thing to keep in mind, 1 million euros today is certainly not the same as it was 20 years ago, right? It was worth much more than it is today. It's just because the purchasing power of your money loses value over time. That's the impact of inflation. The same how in 20 years from now, 1 million will be worth even less, right? That's just how inflation works. And that's why we need to invest the money to at least keep the parity of it, or ideally grow it over time. That's the whole point of it. It's not to impress somebody else how much money you have, but at least to grow your money that you worked for and earned, to keep the same value, or ideally, of course, to grow it over time. When I was young and I always wanted to become a millionaire, it was way different and way harder than it is today. And once again, in 10 years, 20 years from now, I think reaching to $1 million will be significantly easier because salaries also increase, things get more expensive, you get paid more, so to reach to 1 million is way easier in the future. I personally think so, but at the same time, that 1 million will be worth significantly less than it is today, and as I said, in the past. You can just see that by real estate, right? The same house, maybe that was worth $1 million 10 years ago, is now worth 2-3 million, right? And will be worth 10 million in the future. While obviously certain assets do appreciate in time, it goes hand in hand with the loss of purchasing power of your actual fiat money. But let's also talk about how we define a millionaire. Now, it's pretty simple when you think about it, right? A net worth of over 1 million euros or dollars or whatever currency you consider a millionaire in. Now, of course, in Thai baht or Turkish lira, it's probably easier to become a millionaire. I'm really talking about either dollars, pounds, or euros. That's sort of, similar values. If I would have measured all of it in dollars, it would have been probably a few months earlier because obviously dollar is slightly higher denomination than the euro. But whatever you define as your denominating currency, then what you want to do is take all your actual assets that you really own and deduct your liabilities. So for example, if you have a house that's worth €500,000, dollars, whatever it is, but you have a mortgage on it of, let's say, 100,000 euros still left to pay, well, then you should subtract that, and only the balance you should be taking as your actual net worth, because otherwise you would really be inflating your net worth while you don't actually have the assets. If you just bought a house literally now for 500,000, but you still have a 400,000 mortgage on it, well, then in reality, you only so far contributed most likely your down payment of, let's say, 100,000, and that's your net worth. Because if tomorrow you had to liquidate it or sell your house, you would have to pay back the bank, right? So you wouldn't have the 500,000 that you have as the house value. You would pay that back, and you would only have the difference, the 100,000. So that's something a lot of people get tripped up about. They just, look at all the values that they have, add it all up, and think that's their net worth. And that's actually incorrect. You need to deduct your liabilities, your outstandings, your loans, mortgages, whatever you own to other people. That's very important to really have a true figure, right? I think it's important to be true to yourself, right? But sadly, in the times of social media, it's very easy to exaggerate your net worth, put it out there. I'm a six-figure earner, right? The first time I heard the term six-figure earner, I was very impressed. Six-figure means $100,000, imagine, right? But the same principle over here. Imagine most people, let's say in the US, they pay at that level, maybe 40% tax. That leaves them with $60,000 in a year, which in a month would come to around $5,000. And the US being rather expensive to live, right? If you live in New York, well, you're going to spend a lot of that money on rent. So some of them may end up with hardly any savings in a month. So all of a sudden, it puts that six-figure income into quite a different perspective. So that's just something also to keep in mind. A lot of the things you see online, unfortunately, is people boasting too much. They even private jets that are like a setup, staged setup that you can rent for an hour, for a day to take your pictures, and then you post it online. It's just sickening and so sad. And unfortunately, that's where a lot of young people get really mixed up and they feel so bad about themselves because obviously they compare their current lifestyle to some illusionary lifestyle of some online social media influencer who in the end just wants to sell you some of their whatever things that they're selling online. And that's really the dangerous trap, to not compare yourself to others, but really follow your own investment strategy and journey that you set for yourself. With this, let's actually talk about how my 7-figure investment portfolio is composed of. Sounds pretty nice, 7-figure. Hopefully one day we can crank it up to the next level, but I'm really happy with that, of course. And yeah, obviously the majority of it, as I openly shared in previous videos, comes from my real estate investment. Now, a couple of years ago, when I used to work in the UAE, in Dubai, I bought 2 apartments over here that was off plan. So basically that means they were not even existing in a whole new neighborhood. When I bought it over there, there was literally only sand. There was nothing. So I don't know why I bought it. I was very naive in hindsight. But I said, okay, I was a trusted developer, take my money. There was a good payment plan, meaning I didn't have to take a mortgage from the bank and pay no interest. So the developer basically financed it over a number of years, where I just pay quarterly installments, and past the handover, I paid one final installment, and then that was done, right? And at the time, I got a really good deal for those apartments. So of my total portfolio, real estate is around 800,000 euros right now. That comes from 2 apartments. So each one basically is a 1-bedroom, goes for around 400,000 right now if I was to sell that. Now, I kind of like to understate it. Obviously, you never know until you sell it, right? I was just checking it out on a property portal to see what similar apartments in the same compound are selling for. They're actually selling for a higher price, but again, I like to understate a little bit. So 400,000, I'm pretty confident I'll be getting if I was to sell them, on the market, the next few days. So adding those 2 numbers up, that alone is already 800K. So easily the biggest part of my portfolio is in real estate, which of course, on the one hand side, I'm really happy with, right? Because I really appreciate it a lot in value. Plus it's rented out. So it pays me a nice rental income as well. So I'm really happy with this. On the other hand, of course, I'm always about diversification. So when I look at it as a percentage of my total investment portfolio, it's a heavy weighting on real estate, right? That's why also for me in the future, I wouldn't plan on having too much more real estate, at least not in the foreseeable future. Instead, I want to grow my other two pillars. I'll come to this in a second, where I want to invest more money to at least balance it a little bit. Moreover, last year I actually bought one apartment together with my wife in Vilnius, Lithuania, and that I haven't even factored into the equation. While technically we already have some equity in there, we still have a mortgage on it, right, that we're paying off. We even put quite a bit of extra money from ourselves to really make it quite luxurious apartment, I would say. It looks really nice. Hopefully we'll see it this summer. So definitely there is already some equity in it. So I should technically include it in my net worth calculation. But as I said, I like to understate things rather than maximizing every theoretical euro that I do own potentially. I kind of really want to keep a true picture with a little bit of cushion on the upside for myself. So yes, technically I could take the value of the property that it is today, see what other properties in that neighborhood are selling for, deduct the mortgage, divided by 2, as I bought it 50-50 with my wife, and that could be my equity contribution into my net worth. But again, for now it's still fairly small amount, I would say, but then later on, obviously, as we pay off the mortgage and our equity in the apartment raises, then obviously eventually I would reflect it in my net worth tracker, which I'll come to in a second. And apart from that, I'm really not too excited anymore about adding too much more real estate, because of course it has certain benefits. For example, like a 10-year golden visa we got from those apartments for my entire family here, which is amazing. Really love that. That's a big perk. But ultimately, real estate is quite illiquid, right? If I really need the money for an emergency or whatever you have for another great investment opportunity tomorrow, well, it wouldn't be that easy. I would have to sell it. It would take time. Until I really have the money in my bank account, it would take a long time. Plus, it's very immobile, right? If, God forbid, something was to happen in the region, people panic, leave the place, then obviously I can't just transfer my property to another country, right? It would just be set here. Probably the value would go down and I would lose out from that, right? So that's also something to consider. And I'm not planning to sell it anytime soon. At the same time, I'm really not planning to add any more, except one more probably here in the UAE for us to live in. That's something we want to be buying with my wife, maybe in the coming years, to really have our own proper place in addition to the 2 rental units. Next up, we move to my second biggest investment holding, and that's my crypto holding. Now, probably I was a bit late to the game. I wish I would have gotten in earlier, right? I guess all of us wish we gotten in earlier. But still, ultimately, after finding my way around, trading different coins, eventually I understood that Bitcoin is the cryptocurrency of my choice. That's what I understand. And I really started to dollar cost average into it and build up a position into it. Of course, I'm getting closer and closer to my second Bitcoin, which will be really exciting. So currently right now, my Bitcoin holding alone, which is all my crypto that I have, I do have a bit of Nexo token due to benefits I get from the Nexo platform, but it's mostly in Bitcoin and that's how I like it. And currently it's around 180,000 euros, right? That obviously depends on the value of Bitcoin. Hopefully it continues to go up and then that becomes ever more valuable. And I really believe so. And I'm not planning to sell it, right? A lot of people said, well, Guy, now they hit $100,000. Are you planning to sell your crypto holding? Absolutely not, because I genuinely believe we're still early. I could easily see it going to 500,000, 1 million in the future. Yes, it may take a couple of years, but I'm here for the ride and I'm really holding on to it and eventually rather borrow against it. Let's say if we were to buy another real estate somewhere, then obviously I could use that Bitcoin holding and borrow against it, take some money out in dollars or euros and use that for the down payment to then take a mortgage and pay for the other property. So that's my goal. So let's see how it goes. And lastly, and actually the smallest part of my holding is my ETF holding, which currently sits around 80,000 euros. So obviously I would like that to be even bigger in the future, but that's also due to the part that just crypto grew faster than my ETF holding, right? ETF is mostly S&P 500 and a bit of NASDAQ 100, and that's sort of my steady base. Yes, as a percentage of my total portfolio, it's really rather small, but that's also because it grows slower than my other 2 investments, because both my real estate and crypto definitely outgrew my ETF investments, but it's totally fine. Again, I'm really investing here for the long term, next 30, 40, 50 years. I have no issue. I just dollar cost average into it every single week. So hopefully that number will start compounding as well. So for the time being, I'm really happy with a 3-pillar strategy. I'll continue to follow that going forward. Now, also one thing to keep in mind, I'm not including any cash in here or any collectibles or valuables, maybe the car that we bought over here. These things, technically, if you wanted to, right, especially if you're early on to kind of, feel a bit better about your net worth, you can definitely include those. I personally don't, because for example, cash, it comes and goes. I don't want to have too much cash anyways on the sidelines, right? Because it just loses money to inflation, as we discussed in the beginning. And those valuable things, first of all, I don't have too many. As you see me, I'm quite a basic guy. I don't like fancy brands or watches. I really keep things simple. And the only thing would then be a car, for example, but that loses value over time. So I don't really consider it investment unless you buy, I don't know, some collectible car, an old timer, maybe. Or if you're really into some luxury watches, fine. I'm not saying you can't. But personally, I just don't. And as I always say, if you can't measure it, you can't manage it. And that's why I really make sure on a monthly basis, I go through my monthly budget review and net worth tracker, which you can use free of charge. You'll find it in the description down below. I really make sure to fill out all my income, my expenses, and then we come to the net worth over time, where I here basically list all the valuable things that I have in my bank account balance, and then the investments, right? What are the investments that I have, the real estate value that I have, any other assets that I have, and then I can see the net worth hopefully developing over time in a positive direction. The beauty of having done it for so long, here we are back in August 2022 when I started the first time. My net worth at the time was 598K. So in a rather short time, almost double the net worth. And that just shows me that I'm doing something right, and the power of consistent investing over time into things you understand and that have growth potential. Then you can see over here how it developed in 2023 all the way to 850. And in the beginning of last year started off at 833. And you see it also fluctuates, right? Because sometimes, some of the crypto maybe is down for certain months, others doing better, right? We had a big jump over here, and that's because I kind of reevaluated my real estate because it really saw major growth. And for a long time, I didn't actually update it because I really wanted to kind of sandbag it and be very conservative. But eventually I noticed that actually the value that I previously had in my books was way, way, way below the market value. So I kind of revised it, still below the market value, but that's when I saw the major jump, and that was back in November last year. And yeah, honestly, when I saw it the first time, it was definitely really, really exciting to see. And what can I tell you guys? Once I saw that number, I thought it's time to treat myself. And I'm really happy to announce to you that this is my treat. I really thought it's time, I earned it, and I eventually went ahead and bought a Ferrari. So yeah, soon I'm going to make a video and showcasing how great a guy I am, because obviously I must be very successful if I'm driving a Ferrari. Jokes aside, guys, I didn't buy a Ferrari, and I'm not planning to do that anytime soon. You never know, maybe one day, but certainly not on a million. I think that car alone is like 400, 500K. It would just be absolutely reckless to invest into something that loses value. So yeah, don't worry, I'm not planning to buy that. I would hope to upgrade our current car one day, sure, but Ferrari is not on the cards anytime soon. I'm not saying never. It's maybe something to be motivated about for the future, but for time being, nothing changed. And that's exactly my point, right? Once you saw the number, I was excited. I told my wife, as we speak about money quite openly, and it was really cool. But guess what? The following month, when I did my monthly budget and net worth update, it was just another number. It becomes your new base. And then you want to start building from that to go to the next level. And that's just what it is, right? Ultimately, it's just a number. It's just a benchmark along the way. Once you run a marathon of 42 kilometers, it's great. Once you reach the halfway point of 21, right? You're halfway there, but still, it's a long way to go. And the same with investing. I'm only getting started, right? When I look at the compounding effect over time, I'm still really early. I have a long way to go. I'm really excited for what's to come. And I always like to play around with the compound growth calculator. I'll leave a link down in the description below. You can check it out for yourself. But I will just plug in the numbers that I have right now, right? Monthly contribution, let's say 2.5K euros per month. That's, again, on the lower side. Usually I try to aim to invest more, but let's just leave that number. Expected return 8 to 10%, S&P 500 over the year. So let's go with 9%. Annual deposit increase. So that number, hopefully on an annual basis, should increase by 5% going forward, which it really should, right? Because alone to inflation, you lose that money. So you want to compensate that with additional funds that you invest. And investment period, I'm still in my 30s, so I have many years to go. I invest in my health, so I plan to live long, but let's go with 40 years. So if I calculate that, you will see over here, my final balance in 40 years should be 56 million euros, right? So that's a huge number and really exciting. And it's all a question of how long and how early you start investing or how long you live, right? If I change the same number to 50 years, all of a sudden you start really seeing the compound effect over here kicking in, especially later in your life. It would reach over 100 million euros, which would be absolutely incredible. So yeah, hopefully I'll get to make an update video once I hit such a number. We shall see. But if I do, I'll be very excited to give you an update here on my channel in 50 years. So make sure you subscribe to the channel to not miss that update video. But one important thing I also want you to keep in mind is that these values are literally just paper values, right? I'm very conscious and very aware that this number could easily drop as well, right? If in the next few years we enter a bear market, a really major recession, and we have seen that time and time again, where the markets drop 20, 30, 40, up to 50%, then I would quickly go from 1 million to 500,000 or maybe even less, right? If there was a black swan event like we've seen in 2020, 21, nobody could have predicted that. If there was a major conflict in the region going on, people would panic, leave UAE behind, and then obviously the real estate values would drastically collapse. And then all of a sudden my apartments would be worth a fraction of what they are today. Then once again, my net worth would totally collapse. So I understand that while you might feel great about it in a moment, that's always a real reality that you have to consider. But even then, Once again, I know that markets are cyclical. If I stick it out for the long term, I'm very confident I'll come out way better than if I was not to invest in the first place. So my final recommendation, while it's important to track your net worth, your investments, and your money overall, don't over obsess about it, right? Ultimately, it's still just a number, right? It can fluctuate, it goes up and down. It's a nice benchmark, it's nice to chase it and grow it, but don't over obsess. And also live a little bit. I know some people that save 70%, 80% of their income by basically sacrificing all their living standards just for the sake of having more money to invest, to maybe live more comfortably when they're 60, 70 years old or retire early. And for me, that's just not worth living, because ultimately, maybe if you only get up to 80, you then only have 20 years of enjoying life versus spending your first 60 years maybe living like a dog. It's important to contribute into your investments to grow your net worth over time, but don't only focus on that. You're still human. You still want to enjoy life a little bit. So like with anything in life, have a balanced and moderate approach to investing. And that's why I will personally continue with my strategy that I spoke about at length previously. I'll continue to dollar cost average into my 3 pillars. Mostly, of course, right now it's crypto and ETFs. In terms of real estate, I make sure I accumulate a little bit of money on the side in a high yield savings account that I can then eventually use as a down payment to acquire one more property for us to live in here in the UAE. Well, I hope it wasn't too cheesy after all, and you got some value out of it. And once again, don't compare yourself to others. Stick to your own investment strategy and journey, and you'll come out on top eventually. Next up, check out this video over here where I talk more about my 3-pillar investment strategy. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.